Hi, Shae Russell here, editor of the Daily Reckoning Australia, and I just thought we'd take a quick look at what's happening in gold. So I was just going through a report from the World Gold Council. This one in particular that I was looking at how much gold has been bought by gold-backed ETFs around the world. Now, currently, by the end of March, there is 2,200 tonnes under management by gold exchange-traded funds around the globe, worth about $100 billion. Now, the Asian gold-backed ETF market is one of the fastest growing ones at the moment, although admittedly they've only got about 93 tonnes under management. However, that figure will grow. The US market, gold-backed ETF market, they've got about 1,200 tonnes under management. And the European gold-backed ETF market's probably going to crack the 1,000-tonne market in the next couple of months. However, what is interesting is how many more people are moving into gold ETFs and how popular they're becoming. Now, that's probably because of the geopolitical climate we're seeing at the moment. Gold-backed ETFs are one way people use to take advantage of wild price swings in gold that we're seeing. However, there's some bigger trends that are forming that I think people are ignoring. And in my opinion, these are a reason to look at moving some money into maybe physical gold, for example. So, for example, last year, both the people of China and India bought more gold that year than they have before. One of the reasons why they have done this is they were worried about local currency weakness and they see gold as a hedge against that. Furthermore, there's been massive buying sprees from central banks in Russia, Kazakhstan and Turkey. And one of the reasons why they're doing this is they're increasing their gold holdings as a way of diversifying their foreign reserves from the US dollar. Now, these are very bullish signals for gold. The reason why people want to diversify away from local currencies and the US dollar, for example, is because currency weakness often erodes purchasing power locally. Furthermore, I'm convinced that what we're seeing in the gold price at the moment is very reminiscent of 2006. Now, 2006, the gold price started at around $520 but by the end of the year, it finished at around $630 and then the financial crisis hit the year after, and we know what happened then. My point I'm trying to make is gold very quietly rose when nobody was looking, and it did so on the back of rising interest rates and a bull stock market in the US. And we're starting to see that setup happen again here now. We're seeing rising interest rates in the US, and we're also seeing a bull market happening in the US as well. But the difference this time is there's a bit more mistrust with the system and some more currency weakness that is driving the gold price higher. So if you are interested in buying physical gold, make sure you subscribe to our newsletter because we will be releasing a new gold report shortly. Other than that, I'll see you next week. Bye-bye.